I'm wondering what you make of the reversal today, too. There's the intraday. Stock got to 440, and then it started going straight downhill to where it currently sits. What's up with that, do you think?
Well, look, I think this is a company that is transforming, has transformed the world in many respects. It's how tens of millions of children in the U.S. alone have actually gone to school over the last year. It's transformed the way both small and large enterprises work with their staff and their customers. And I don't think the genie goes back in the bottle just because everyone gets the vaccine and they're able to go out. We will still be using Zoom a year from now, 3 years from now, 10 years from now. Despite the fact that there's competition, they seem to have really grasped a large part of this market. They're holding on to it, and they're improving their services. So all of that can be true, and you can also say it's not a cheap stock. Everything that I've said is pretty well appreciated by the street. So right now they have a long way to go to grow into the current valuation, and I'm going through that litany of items in the Zoom story because I think they apply, Scott, so broadly to so many other names that have become mid and large cap stocks over the last year. There are many companies that need to grow into the valuations they've gotten. So that's how you could see a company like Zoom with outstanding results, just a great report, have a little bit of a reversal after an initial rally because it's not cheap. And there will be people who take profits on great news. That being said, I have no plans to go anywhere. I think Zoom is a name that is going to be must-own over the next 5-10 years, and I plan to stick with it. So, all right, Jim, Josh raises great points, and it sets me up for the next place I want to go anyway. Forget work from home. Forget return to the world. These are just new way of living stocks, right? That's essentially what Josh has just said. Zoom is going to be popular next year. It's going to be popular 3 years from now and 5 years and so after. However, there is the issue of valuation. And a lot of these stocks that we talk about every day fall into that basket. Transformative companies that aren't just going to go back in the bottle once we all get on with our lives post-pandemic. But we do have to wrestle with their high valuations. How do we do that?
Yeah, well, look, you go back 6 months ago, these valuations entirely justified. I think Josh used the word transformed, and you used it as well. Zoom did transform and in some ways save the world last year. But we're coming out of this. Vaccines are going to be widely distributed over the next few months. There are certainly people who will still work from home. There's no question about that. But I think there's also no question that some people are going to get back on the road. I'm one of them. We've all in business been able to not only maintain but expand our business thanks to Zoom. But I know there are new clients that I want to visit in person. I know there are future new clients that I will not win if I don't visit them in person. And kids are going back to school. And grandparents will eventually be seeing their grandkids in person instead of Zoom. So when I put all that together, I just look at the fundamental picture, and the justification for a triple-digit multiple becomes hollow to me simply because the economy is reopening. And I don't think I need to make it any harder than what I just said. So great report, no question. I mean, what was it, 367% growth in revenue? The problem is it's backward looking, and when you look forward, I just don't see anywhere near that growth rate to justify the multiple.
So, Steph, I'm trying to take a look at these other stocks that have, obviously changed the way we live and may continue to do so. And I think of a DocuSign, for example, which had a meteoric rise. The stock is down, however, over the last 6 months by 10%. I think of Teladoc. That stock's basically flat over the last 6 months, has had a meteoric rise over the past year. We have to parse it that closely. So stocks that have changed our lives and will likely continue to do so, but they still have to grow into the valuations, as Josh said. And as Jim points out, as we get on with our lives, are they ever going to be able to grow into the lofty valuations they have now? Or do those valuations, those multiples, need to compress to make the story really compelling for new investors?
Well, Scott, valuations always matter, no matter what sector, what industry, what stock, right? So it's what you're willing to pay. And quite frankly, I think there are plenty of places in technology that are seeing secular growth. And let's just separate stay at home and going back to work, right? Let's just talk about some of the key technology initiatives. AI, cloud, data center, retail, e-commerce, anything that has auto or industrial exposure, those are the areas where I think you're going to, and many more, by the way, and I think you're going to continue to see their total addressable markets expand, companies taking market share, free cash flow generation will be huge. And so those are really the positive characteristics, and those are the themes that I want exposure to. I don't own any of the names that you had just talked about. The valuations were always very rich for me. So what I want to do is, and I got to tell you, I mean, one of the reasons why I've been selling Microsoft, I sold outright of Salesforce.com, and I'm selling some Facebook because A, they're very well owned, B, they're very well liked. And the valuations are just, I can't understand them. They're extended. When I look at what I do own in Broadcom, in Lam Research, in Applied Materials, in IBM, looking at Accenture and NXPI, all of those companies are trading at a much better, if in my mind, a much lower valuation, and I can actually understand why they're this low. And maybe over time they have exposure to these end markets, and over time they should gain market share.
Okay.